Mexican annual inflation likely eased further in early April, backing expectations that policymakers will leave interest rates on hold this year to bolster a wobbly economic recovery. Joining me down the line for a look ahead at the Bank of Mexico's rate decision is Marco Oviedo. Marco, inflation for the 12 months through the first half of April was seen to easing to 3.55%. Mexico's central bank is targeting 3%, although allowing for a percentage point range. But to your mind, does this drop allow sufficient leeway to leave borrowing costs at their current, albeit record low levels?
Yes, well, if you compare these rates to the U.S., there is still some room to implement some rate cuts. But it seems to me that the board is resilient to have negative real rates for a prolonged period of time in a context in which you have and you will have lower liquidity and more episodes of high volatility could put some pressure on the exchange rate and could harm inflation expectations and the economy performance overall. So I think that the central bank is confident that the 100 basis rate cut that implemented last year should be sufficient to provide some boost to aggregate demand, and that will be consistent with having controlled inflation, not close to the target, but around the interval, the target interval.
The Finance Ministry, which last year revised down its growth estimate 4 times, plans to review its GDP estimates once it has official numbers in hand. First quarter data are due on May 23rd, but the proxy GDP released later today may give some indication. What sort of figure are you expecting?
We are expecting for the annual growth of this year 3%, but we see downside risk. We are expecting the economy to expand 1% in the first quarter of this year on an annual basis, which is consistent with a 2.5 quarter-to-quarter annualized rate. But we still see some weakness in the domestic demand, particularly consumption and investment, and this is due to some fiscal reform effects through higher taxes in the disposable income of individuals and firms. So we're waiting to see this Friday a GDP proxy report to see how the services sector is behaving, and then industrial production for March in order to see if the economy is really going to pick up. If that's the case, then the economy will start expanding, and probably the 3% is feasible. But definitely the 3.9 that the Finance Ministry has currently is way out of it seems unfeasible.
At 3.5%, the country's key interest rate may be aimed at improving growth prospects, but it doesn't offer the carry opportunities which investors can get in neighbouring countries such as Brazil, currently at 11%. What do you make of the suggestion that the peso, once a favourite EM currency, is losing its allure?
Yes, we are expecting the peso to hover around the current levels like 13.1 or 13, and then start appreciating towards 12.90 in the second half of the year, but at a very modest pace, because we're going to have less liquidity down the road. That lower liquidity will be consistent with the U.S. recovering, which at the end it would imply the Mexican economy to pick up faster. So the Mexican peso probably is going to appreciate later than the US dollar with respect to the rest of the currencies, but most likely to remain very, very stable against the dollar.
Marco, thank you so much for your time today. It's been a pleasure speaking to you. Okay, well that's all from me for the moment. Sofia Erribo will be reminding you of all the week's biggest market movers in the wrap-up, so make sure you click back for that. But for me, and for now, it's goodbye.